Treasurer Wayne Swan has told a leading Asian economic forum that Australia needs to develop its business ties with China.
And those opportunities could present themselves soon. The Chinese government has announced it will make it easier for global institutions to buy shares listed on the country's two main stock exchanges.
Wayne Swan is at the Asian Financial Forum talking up Australia's credentials, but much of the focus of the two-day event is what's going on with China's government. The man who regulates Chinese share trading wants more global investors.
Our goal is to make it easier for non-residents to issue or trade securities in domestic market.
Under current regulations, just over 100 companies can trade in Chinese-denominated shares. Only 3 are Australian. For local investors wanting exposure to equities, the Australian share market is still a pretty good option because they're buying shares in brands they know, operating in a market they understand. And experts say this latest move by Chinese regulators wasn't aimed at ordinary share market investors. The ultimate goal could be creating opportunities for Chinese investors.
It appears the message has been sent behind closed doors back to China that if it wishes to get free access to markets outside China, it has to allow greater access to markets in China.
Lisa Goodhander spent 2 decades engaging with China. She says it's important to remember that as a free market economy, China and its businesses are still maturing.
There's only a few kind of pioneering Chinese companies that really are globally, internationally recognised as brands. And so when you're investing in a new company in China, you know, it's a good idea to understand what their strategy is in terms of growth.
It's not just business plans, but different language, culture and regulatory environments.
To get access to the China market, you need to understand those challenges so that you can address them and choose the ones that you will tackle and choose the ones that you may need assistance with.
Local investors have more than one option when it comes to capitalising on Chinese growth.
There are very safe ways to take exposure to China, and one of them, of course, would be to buy resource stocks listed in Australia.
Michael McCarthy says recent data points to continued high single-digit economic growth in China. Marcus Rubenstein, World News Australia.